Adjusted balance method. Under this method, the book balance and the bank balance are brought to a correct cash balance that must appear on the balance sheet. Book to bank method. Under this method, the book balance is reconciled with the bank balance, or the book balance is adjusted to equal the bank balance. In here, the usual book reconciling items are treated in the same manner they are treated in the adjusted balance method. Bank to book method. Under this method, the bank balance is reconciled with the book balance, or the bank balance is adjusted to equal the book balance. Here, the usual bank reconciling items are treated in the same manner they are treated in the adjusted balance method. Before we proceed on the computation proper, we must be aware of the following. To reconcile a bank statement, the account balance is reported by the bank is compared to the general ledger of a business. Next, businesses maintain a cash book to record both bank transactions as well as cash transactions. The cash column in the cash book shows the available cash, while the bank column shows the cash at the bank. Similarly, the bank also keeps an account for every customer. In the bank books, the deposits are recorded on the credit side, while the withdrawals are recorded on the debit side. The bank sends the account statement to its customers every month or at regular intervals. Here are some illustrations to prepare bank reconciliation. The cash records of Company X show the following for the month of January. The general ledger of the company shows the cash in bank account for January as follows. The following is the bank statement for January received from the first bank. The following data are gathered in connection with the CM and DM appearing on the bank statement. The CM of 15,000 on January 26th represents the proceeds of note collected by the bank in favor of the company. And the RT of 5,000 represents check of customer deposited previously but returned by the bank in favor of the company. Now, let's proceed to the computation proper. The following are the general procedures in preparing the reconciliation. Step 1. Determine the balance per book and the balance per bank. Based on the cash records of Company X, the balance per book is equal to the total cash receipts of 100,000, less total cash disbursements of 72,000. Thus, the cash in bank account on the book of the depositor has a debit balance of 28,000. Let's proceed to the balance per bank, which is shown on the bank statement as the final item on January 30th balance amounting to 62,000. Step 2. Trace the cash receipts to the bank statement to ascertain whether there are deposits not yet acknowledged by the bank. We are about to determine the deposit in transit, since as defined deposit in transit are collections already recorded by the depositor as cash receipts, but not yet reflected on the bank statement. Amounts that are in the ledger but not in the bank statement are bank reconciling items. For this purpose, we simply mark the items that appear in both the ledger and the bank statement. Items not marked are the reconciling items. In the illustrative problem, as we compare the bank statement records of deposits and the cash receipt of Company X, we can see that the cash receipts of 60,000 pesos is reflected on the bank statement. But the cash receipts of 40,000 pesos on January 31st does not appear on the bank statement. Thus, this is a deposit in transit. And we will plot this under the bank reconciling items. Since the bank balance is understated, it is added to the bank balance. Step 3. Trace the checks issued to the bank statement to ascertain whether there are checks not yet presented for payment. As stated, we are to ascertain whether there are checks not yet presented for payment. Looking back on the bank reconciling items that we've discussed, these items are called outstanding checks. Again, we will compare the bank statement and the ledger, but this time we will use the bank statement records of withdrawals, and the cash disbursement of Company X. Upon comparing, we can see that cash disbursements for check number 721, and check number 722, are all reflected on the bank statement, but the check number 723 and 724, are not reflected in the bank statement. As to its treatment, we are going to plot this under the bank reconciling items as a deduction amounting to 65,000. Outstanding checks already decrease the book balance, but have no effect on the bank balance because the checks are not yet paid by the bank. Consequently, bank balance is overstated, so these are deducted from the book balance. Step 4. The bank statement should be examined to determine whether there are bank credits or bank debits not yet recorded by the depositor. Amounts that are in the bank statement but not in the ledger are book reconciling items. Again, we will mark the items that appear on both the bank statement and the ledger and those not marked to the reconciling items. In the illustrative problem, the deposits amounting to 60,000 is properly reflected on the cash receipts of Company X, but in the bank deposits, there is one item that are not present in the ledger, and this is represented by a CM of 15,000 on January 26. The book balance is understated in relation to the correct cash balance. Hence, credit memos are added to the book balance amounting to 15,000. Next, we proceed on comparing the bank statement withdrawals and cash disbursements. We can see that check number 721 and 722 are all reflected on the cash disbursements, but there are other remaining items that do not appear on the ledger, and these are 5,000 RT due to insufficiency of funds, and the 1,000 SC. The book balance is overstated in relation to the correct cash balance. Hence, we plot 6,000 as a deduction from the book balance. Step 5. Watch out of errors. Again, errors are reconciling items of the party which committed them. In the illustrative problem, there are no errors, but if there is, analyze errors whether it is a bank error or book error. Likewise, if it overstates or understates the balances, then adjust accordingly. If the error caused the book or bank balance to be overstated, deduct the error. If it was understated, add it. For example, the collection from customer which is deposited with an amount of 10,000 but recorded in the book only as 1,000. There is understatement of cash receipt of 9,000. The error is added to the book balance and adjusted as follows. Debit, cash in bank 9,000. Credit, accounts receivable 9,000. Again, in the illustrative problem there are no errors committed. At this point, a formal reconciliation is almost done since we have plotted the reconciling items for both book and bank. We just need to compute the balances, and it must look similar to the following table below. In adjusted balance method, the book balance and the bank balance are brought to a correct cash balance that must appear on the balance sheet. It means that both adjusted bank balance and adjusted book balance should be the same. With regards to the book to bank balance method, the book balance is reconciled with the bank balance, or the book balance is adjusted to equal the bank balance. In here, the usual book reconciling items are treated in the same manner they are treated in the adjusted balance method. Thus, credit memos are added, and debit memos are deducted. However, with respect to the bank reconciling items, the treatment is simply reversed. Since we already have the values from the adjusted balance method, we'll use that to prepare for the book to bank balance method. After the adjustments, the bank balance should be the same to the unadjusted bank statement balance amounting to 62,000. Under this method, the bank balance is reconciled with the book balance, or the bank balance is adjusted to equal the book balance. Here, the usual bank reconciling items are treated in the same manner they are treated in the adjusted balance method. However, the book reconciling items, the treatment is simply reversed. Again, since we already have the values from the adjusted balance method, we'll use that to prepare for the bank to book balance method. Moreover, just like in the book to bank balance method, the book balance after adjustments should also be equal to the unadjusted balance per book statement. After adjusting the balances as per the bank and as per the books, the adjusted amounts should be the same. If they are still not equal, you will have to repeat the process of reconciliation again. Once the balances are equal, businesses need to prepare journal entries for the adjustments to the balance per books. In preparation of adjusting journal entries, only the book reconciling items require adjusting journal entries on the book of the depositor. The adjustments are necessary to bring the cash in bank balance to its correct cash balance for statement presentation purposes. In preparation of adjustments, debit, if added to the book balance, and credit, if deducted from the book balance. Based from the previous illustration, the necessary adjusting entries to be prepared are: to record the note collected by bank, debit, cash in bank, 15,000, and credit, notes receivable, 15,000. To record the NSF customer check, debit, accounts receivable, 5,000, and credit, cash in bank, 5,000. To record the bank service charge, debit, bank service charge, 1,000, and credit, cash in bank, 1,000.